Welcome to IMG. My name is Manny Iglesias. Folks, I want to give you a little bit of an insight. And I think that if you've been listening for a while, you understand how we think, how we approach the market. About 4 months ago, I mentioned in our video that there was a long-term cup handle that took over 30 years to form that had developed, and the market was in a setup to approach the $40 level. At that time, the market had just surpassed $35. And then that the investors would be eyeing the possibility of the $50 level. That was 4 months ago. About a month ago, 30 days ago, we had mentioned that if you were in the market, enjoy it and just be cautious, but enjoy obviously the positions that you had initiated at lower levels. But if you were out of the market and missed that first thrust, getting close to $47, $48, then just simply sit it out. Wait until the market gave you the opportunity. 3 weeks ago, we mentioned that there were some hidden risk behind these peaks that we were now looking at, pushing obviously the $53, $54 price range. Hidden risk at market tops. And that you should exercise, and I'm looking at my notes because I don't want to miss anything, that we were exposing ourselves, many investors were exposing themselves with higher leverage because of the excitement in the marketplace. This goes back to what I also mentioned about a week ago. We use common sense, money management, mathematics in regards to the technicals, and obviously a little dose of the fundamentals. In other words, a degree of thinking, patience, and we never in any way, shape, or form in any of these scenarios did we ever mention a time frame. And I want to be very specific about this. The way we think in our philosophy is to let the market come to us. And when the market offers the opportunities, then we engage. 2 weeks ago, we mentioned that hopefully you had locked in your profits, because those paper profits are exactly that. They're paper profits. They would evaporate if any severe corrections were to occur. And that we were hoping that you would lock in your profits and wait for a new trading range. Simple as that. Well, last week, exactly what we had discussed occurred. Severe market volatility, incredible amounts of selling and some slight profit taking, but some panic selling dominated the marketplace, and we saw, unfortunately, some very severe swings in prices, and many investors are out. They're gone because they were highly leveraged, highly exposed, as opposed to being stress-free, which we had spoken about. Enjoy this market. Enjoy your profits. Take your profits, but put yourself in a stress-free environment. And this is imperative for us to discuss. This shows you our thought process. In this case, these situations unfolded within 4 months. Highly excited that we actually saw or witnessed these things materialize. But the reality is, if it would have taken 8 months, if it would have taken 12 months, we would have never changed our approach, because you must approach this marketplace in order to enjoy and reap the benefits with a degree of common sense, money management, and then look carefully at what the technical, long-term technical signals are giving you or offering you. It's not that the short-term signals are not valid. Certainly they are. But the long-term technical picture with a dose of the fundamentals, and looking at a market if it's overextended or if it's corrected significantly. All of these factors are valid, are in place, and it doesn't matter if it takes 4 months for these things to materialize or if it takes a year. You stick to your plan. You work with discipline, and that's how you have a better chance of great success in the marketplace. We do have at this point in time certain key points that we're looking at. For those key points as entry points, I highly recommend that you contact IMG and allow us to discuss those entry points with you. I wish you all the very best. Contact IMG. We're here to assist. All the very best.